I'm going to come to you first, Maneesh, on what you made. We're steadying the ship. There was some spike of expectation that there would be a rate cut of 25 basis points. That's clearly not happened. Street has not got that little booster dose maybe it needed, and you're seeing that reaction pair out. But all in all, a message that we're going to have a sensible monetary policy which sticks to what we have already put in place.
You can't call RBI's policy nonsensible, unsensible, so to say, ever. On TV.
Yeah.
So it's okay. I mean, we just had sort of lots of rate easing, liquidity easing in last few months. I think, Indian conditions would drive rates a lot lower. That's been my view on your show for many, many quarters. I think both exteriors and interiors of economy actually are not supporting a case of a pause at this stage. But having done a very largish 100-odd basis point rate cut, as you said, since February, could you watch for a quarter? Yes, of course, especially with respect to the uncertainty around us. I think, to take a step back, I think India leverage cycle is clearly thawing. The corporate leverage cycle could not get cranked up in last 2-3 years of having such substantial high margins across corporate, and the household leverage cycle has slowed, and so to that extent, at some point in time, if you want to crank up the growth, you will have to sort of ease monetary policy, given the space in the fiscal side is very, very limited, Tamanna. So my view remains that we are transitioning, and I've made this fundamental point, just last point here, that India is transitioning from a sort of middling 4-6% inflation to 2-4% inflation over the next many years. And that would mean that the rates will have to settle a lot lower than, what we've seen in last 5-10 years. It would happen slowly and steadily, but, there is what we saw in early 2000s as second set of transition is happening as we speak, as economy evolves from a...
Maneesh, I just know, just to the point that you made, and I want to contextualize that. I think it's important because my point is that a non-reactive policy, when I say sensible, and I think that's important to put into context and on record, we're not a nation and not a central bank that reacts to daily threats and hyperbole that we're seeing around us. So it's important that we are measured, we are steady, and we don't change our track because of one of the largest economies in the world threatening us with very high tariffs in the next 24 hours, and we don't know what's going to happen there. So just to make that point.